Friends, in this video for I Thought Wealth, I am going to talk to you on the topic managing risk in themes. The recent years has seen a lot of thematic investing gain traction. Even retail investors love the idea of betting on a theme. While there cannot be a better way of organizing your thoughts than through a theme, it is important to note that how much we like a theme influences our investing significantly. For example, last year there were some overarching themes which caught the imagination of investors. Specialty chemicals was one, APIs was another, consumption was another one. You keep getting theme after theme which you like. So, when it is being presented to you in a way which makes you appreciate it, like it a lot, you naturally want to invest your money on the theme. But sometimes we tend to go overboard. Many who are new to thematic investing have fallen in love with one theme simply because they have been given a lot of exposure to information on that theme. So when I become comfortable with one theme and I become more familiar with that theme, my comfort level makes me want to invest more of my money on that theme. Sometimes it becomes so obsessive that many amongst us have portfolios of only one theme. So it could be EV, it could be consumption, it could be financials, it could be pharma, it could be API, it could be specialty chemicals. So whatever theme one tends to like too much becomes a very dominant part of a portfolio. Sometimes it's even 80-90%. This is where I think even if you are very convinced on a theme, if you have done all your homework, if you believe in it, you still have to think about the risks. Sometimes when you believe too much in something, you tend to overlook the risks. You believe your conviction will carry the day, but risks have their own way of making a comeback and they have their own way of getting back at us if we neglect them. That is where not neglecting risks is a very critical part of thematic investing. So, if you want to be a thematic investor, you should first understand that you should not play just one theme. So you need to have a blend of themes. So you can have 4 or 5 themes. If you do that, then you are able to control your exposure to any single theme. Naturally, all themes are not going to fire at the same time. So some themes may start performing earlier, while others may come with a lag. As a thematic investor, it is very important for you to control how much individual themes get exposure in your portfolio. If you are one of those who have very high exposure to one theme even now, even if a lot of what you have gained in the theme are profits and not capital, you still need to pair and de-risk your overall portfolio by finding new themes. Assume you don't have a ready theme, you still have to create cash and lighten yourself in the themes that have a dominant influence on your portfolio. So, falling in love with a theme is okay, but don't fall hopelessly in love so that that theme becomes the dominant factor in your investment life. So, you need to really bring your risks down and try and create more variety in your portfolio. So you need to bring in cash first and then identify some other theme to which you can take exposure. Too much of performance can also create a problem. You may have bought a theme for only 20%, but it could have gone 2 or 3x like has happened in the last few years. What I find people do is, even after that success, they are not able to control their conviction in the theme, and in fact that success makes them go overboard. So they want to not sell anything and they want to carry the entire position, as if from there also they will still get the same investment rewards going forward. More often than not, that doesn't happen because economic fundamentals change, context changes, demand changes, the reasons which caused the team to gain so much valuations slowly start receding, and when people realize that more people want to leave that team, and you would have been the one who didn't capitalize on something you did well by not taking advantage of the high valuations. Effectively, risk management is meant to help you do that. So you bought something for 100, it became 300, and in your portfolio, it became a very high exposure. You have a chance of paring down your exposure. While you still continue to be believing in that team, you ensure that you don't believe too much and affect your overall portfolio's stability. Risk management is about managing teams constructively, being pragmatic when you're successful, and not allowing any team to dominate your conviction. This, in essence, is how you can turn thematic investing into a very powerful idea in your investment portfolio, and you will be able to enjoy the success of your thematic investing. I do hope you use these takeaways and carry it into your portfolio so that you make money and also get to enjoy it. Thank you very much for watching this video.